All right, welcome to Tuesday's Tools on Purpose at the Business on Purpose podcast. Tuesdays are all about equipping you with the tools that you need to run your business with intention and purpose. Our mission here at Business on Purpose is to liberate business owners from chaos so they can make time for what matters most. My name is Patrice Miles, and I'm one of the coaches on the team. Every Tuesday, we dive into the world of tools because in a world where your time is your most precious asset, finding the right tools to streamline your operations and elevate your business can really make all the difference. So, in each episode, we bring you interviews with experts, we share success stories, provide step by step guides to empower you on your business journey. But remember, guys, it's not just about having the right tools, it's about actually using them to create a meaningful and fulfilling business. So, today's topic is a tax strategy called pass through entity tax. Our guest today is my CPA, Paul Stafford, with Apex Strategic CPAs. Now, Paul's father was my CPA for years until he retired, and we were assigned to someone else in the firm. Paul's father was amazing. He always took the time to invest in my family and my business by always creating opportunities for tax strategies that would benefit us in the long run. He really loved what he did, and it showed in the way that he treated me and my family. When he retired, the person that we were assigned just was not the same. But luckily, my husband met John, and immediately after an initial consultation, I realized the apple did not fall far from the tree. Paul is amazing, and the amount of money that he has saved us with his tax strategies, along with his care for our small business, when he can actually take that time and devote it to the big dogs, makes me truly understand that it's more than a relationship, it's a friendship. Paul, welcome to the podcast. Tell us just a little bit about yourself.
Well, thank you for having me, Patrice. I really appreciate it. And thank you to My Business on Purpose for giving me a chance to share some knowledge that will hopefully be helpful. Again, my name is Paul Stafford. I'm one of the co-owners of Apex Strategic CPAs. We named it Strategic because we want to be intentional and strategic about the advantages that we can provide, just making intentional decisions and planning accordingly for those decisions to be made, whether in the current year or in years down the road.
Now, I know that you also are married, I believe, and you have a child.
Yes, I do. I'm married and have two children. One's 3, Caroline is 3, and then Hunter is 8 months old now.
Oh my
So
goodness.
a lot
He's
going
8
on.
months already.
8 months. Yeah, he's growing and starting to crawl and do all the things. So it's such a blessing.
It goes by very fast. Well, Paul, thanks for coming on. Tell me, so what is pass-through entity tax?
Yeah, so great question. It really, so pass-through entity tax, as the name implies, is only applies to pass-through entities. So what that means is essentially partnerships and S corporations where the income or expenses flow through from the business, flow through down to the personal tax return of the individual owners or the business owners.
Okay.
So
And
that
so
essentially sums it up.
so tell me, why should a small business owner use this strategy?
So it's kind of twofold as to why. First of all, pass through entity tax returns have come about here in really the past few years. Some states took it on maybe 5 years ago, but states such as Kentucky and Indiana decided to establish a pass through entity tax return in 2022. And the reason for this really came about is because if you look at a Schedule A, which lists out all the itemized deductions on an individual tax return, the first line item you will notice is state and local income tax. So you get a deduction on your personal tax return for state and local income taxes that you pay over the course of the year. Now, you're limited to only 10,000 of the state and local income taxes that you paid over the course of the year. You're limited to 10,000 deduction. That's it. So if you pay over that, it's basically lost. So for example, let's just take two married individuals. One makes 100,000 and the other makes 100,000 as well on a W-2. So in the state of Kentucky, they would each pay 5% income tax. So that amounts to $10,000 total for their state income tax. And then if you add in local income tax, that's an additional, for example, if they work in Louisville, Kentucky, that is 2.2%. So essentially, they get to take advantage of the 5% for each one of their incomes, the $100,000 income, but they lose out on that local income tax that they pay. They don't get a deduction for that. So in addition, let's just add to this. So let's just say one of those married individuals in my example, they have a business. So let's just say they get 100,000 in business income. So they take a salary, let's just say it's an S corp. They take a salary of 100,000 in my example, and they get 100,000 in income from that S corp. Well, they're going to pay tax because it's flow through, because an S corp is a flow through. That 100,000 in income is going to flow down to their personal return, and they're going to pay Kentucky tax. Let's just say it's a Kentucky company. They're going to pay 5% on that 100,000. Well, now with the pass-through entity tax return that you can file in the state of Kentucky, you pay that tax that you would have paid at the personal level, at the individual level. You pay it now at the corporate level, so at the business level. So not only do you get to take advantage of this deduction at the business level, it's a deduction for federal tax purposes. So you're now not paying 100,000. You're not paying tax on $100,000 in income. You're paying tax on $95,000 of income because you're getting a 5% deduction on the federal side. Now you don't get a deduction on the state side, so you're still looking at 100,000, but you're saving essentially $5,000 times whatever your tax rate is for that particular year. So, if your tax rate's 25%, you're saving over $1,000 in tax. So it's kind of a no-brainer. Really, no matter what your income is going to be from your partnership or your S corp.
Okay.
But also you get to take advantage of that deduction that you wouldn't have had on your personal return.
Yeah, it sounds fantastic. I know you're here in the state of Kentucky with me, and our listeners are all across the nation.
Yep.
Is this apply for every state, or is there only certain states that have this?
Great question. So more and more states, I don't know the exact number of states that have adopted this pass-through entity tax pass-through entity tax return. However, the majority of states have done this just because they want to be competitive. California actually surprisingly did it at least 3 years ago. And then states like Indiana and Kentucky, it's been more recent. They've been a little bit slower to change. So in Indiana, for example, it was in 2022 that they adopted this tax return. I think Kansas was in 2021, for example, and I think Missouri was that same in 2021. But you would want to contact your CPA just to make sure that you're taking advantage of this return to be filed, because there is some real tax savings there.
Yeah, it sure sounds like it. Is there any additional information you'd like to give our listeners in regards to this pass-through entity tax?
I would say that in general, if you don't know whether you're filing this tax return or not, you need to be asking the question, because like I said, even just on 100,000 of income, you're saving, I know I could work with an extra $1,000 in my life,
Okay, that's great.
Up.
Well, Paul, thanks so much for joining us today. If any of our listeners do want to get a hold of you to talk more about this pass-through entity tax, or just anything in general about Apex Strategic CPAs and what you can do for their business, what is the best way for them to reach out to you?
You can email me at paul@apexstrategic.cpa, or my phone number is 502-386-2205. That's pretty much the best way to reach out to me.
Awesome. Well, Kevin will also make sure to put that information up on the screen and also in the notes. So if you guys want to get some more information about that or just ask some questions, Paul is wonderful and he will definitely take the time to spend with you. So that is a wrap for Tuesday's Tools on Purpose. Enjoy your new tool, Pass-Through Entity Tax. Remember, guys, every small action can lead to big results. What action are you going to take today in regards to the pass-through entity tax? Write it down and then go and actually implement it. For those of you that are tired of living in chaos and you're just ready to start working on your business instead of in it, please feel free to contact me at patrice@mybusinessonpurpose.com. I would love to connect with you and learn a little bit more about your business. Also, we do have our Healthy Business Owner Assessment. If you are brave enough to take it, Kevin's going to put that QR code and also a link for that test. It only takes about 7 minutes, and then you will find out how healthy your business is. Just to let you know, guys, a 0 is not good, but a 40 is a perfect score. So if you're brave enough, take about 7 minutes, fill this out to find out how healthy your business really is. Otherwise, I will see you guys next Tuesday.